Good morning. Hello, everyone. Thank you for participating in today's webinar, PPP Part 3. My name is Stella Primo, and I'm the Executive Director of the Capital Region Family Business Center. The Family Business Center is a 501c3 nonprofit organization that was started over a decade ago by family businesses interested in sharing resources and best practices on family business succession. Our mission is to help family businesses in our region to grow and prosper. If you're not a member yet, please consider joining our outstanding network. This webinar is going to be recorded and included on our website at capfamilybus.org by this afternoon, and a link will be sent to everyone in an email update. We're going to have a section for Q&A below. You'll see it in the box, and we'll get to those at the end of the presentation. Again, we'll also send the PowerPoint presentation later today. This presentation is for educational purposes only and is not intended to be advice. Please contact your personal advisors for specific questions regarding your situation. Riley and Ben, thank you very, very much for being here and for sharing the recent update that the SBA has sent out. Go ahead, take it away, Riley. Thank you.
All right, thank you, Stella. It's a pleasure to be here again for episode 2 of the Ben and Riley Show. My name's Riley Gardner. I'm an AVP Senior Credit Analyst with River City Bank. I've been heavily involved in the bank's efforts on the PPP program. And I'm joined today again by Ben Brown, a partner with BFBA and someone that we consider a subject matter expert on the PPP program. I'm very grateful that Ben is here again today and can share a whole host of detailed insights on the accounting perspective on the PPP program. I think it'll be helpful to everyone on the call today. So to touch on the big picture, we decided to do a follow-up today to our original PPP loan forgiveness webinar because we believe the new SBA loan forgiveness application answers a lot of key questions. We think it is important for business owners to know as they make decisions on employment and how to use the funds during the rest of the covered period, the new information that's come out. So a few of the key topics that we will cover today are clarifications on the paid versus incurred question, clarifications on how to calculate FTEs, clarifications on alternative payroll covered period, which is an alternative to the 8-week period. There's more information on the economic uncertainty certification and how that will be treated. We also have more information on FTE reduction exceptions, FTE reduction safe harbor, what documentation you need to prepare and where you can find a list of what that stuff is, and then considerations around when you should apply for forgiveness. I would point out that a lot of questions still remain unanswered. There's a lot of things that we simply don't know. So we'll provide some opinions here today, but I would just provide the overall caveat that there's a lot of information that will potentially still be clarified in the future, but we're going to do our best today with what we have. I'd say as a general note, and Stella, if you can go to the next slide here, compliance has become easier from a forgivable use perspective, but the application itself has added some complications in some of the details that is probably worth looking into a bit deeper. Another thing to consider as we go into this presentation is that many of you have probably also seen various media coverage of Congress discussing, for example, extending the 8-week period, potentially removing the 75% payroll minimum threshold, potentially increasing the repayment term of the loan, or making changes to FICA and other things. I would emphasize that as of now, all of that stuff is speculation. We really don't know how it's going to end up. It's really impossible to say. So what we're trying to provide here today is our interpretation of the rules and guidance as it stands today. But I would also make sure that everyone knows there have been so many changes to this program so far that it will definitely be a good idea to pay attention to new developments with the program because some of these key things could change. So without further ado, the last slide was a disclaimer. Keep in mind all of the opinions expressed in this presentation are those of myself and Ben, and don't necessarily represent policy or guidance from River City Bank or BFBA. Sorry for the obligatory disclaimer. So in terms of the process, and thanks, Stella. We've gone over this a bit before, but we just want to reemphasize because we've gotten a lot of questions on it, both in the registration for the webinar and also separately through email. So essentially, once once the funds are spent during the 8-week period, you would then prepare the request for loan forgiveness, which you will then submit to your bank. There have been some questions over whether you submit this to the FBA or your lender, and it will be submitted to your lender. There's also questions around when this will be submitted, and we'll go over some considerations with that later. There's not a specific date or deadline. The next step, the lender will have 60 days to review the application and make a decision on loan forgiveness, after which they will submit that application to the SBA. The SBA, according to legislation, has 90 days to go over the application, make a decision, and remit the forgiven amount back to the bank, at which point the bank will cancel the applicable portion of the borrower's loan repayment obligation. And so Ben and I were talking about this today. There's been a lot of concern over businesses that have accessed this program and the timing of having their loan forgiven, especially if they have to start loan payments in 6 months. I would say this is an overall, and Ben, feel free to interrupt me at any time and jump in. This is an overall requirement by legislation, but from a bank perspective, we expect the lender portion as quickly as we can complete it, and most likely much faster than 60 days. And on the SBA portion, I would say for businesses that have accessed $2 million or greater, the review timeframe will probably be extended longer than those with less than 2 million, but it's not necessarily something that will take the full 90 days. This is just what the process could take up to. And Stella, if you want to go to the next slide here. Another quick overview of some of the very basics of loan forgiveness. So the main things, and I think most of you, especially if you were on our last webinar on this topic, are familiar with these, but payroll costs, rent, utilities, and interest. A couple of key points in here. Keep in mind that for rent, utilities, and interest, these must be for lease agreements, other service arrangements, or loans that were in place before February 15th, 2020. I would also highlight that the loan is potentially 100% forgivable, provided that you use the funds according to the program, you meet the applicable employee and salary retention thresholds, and 75% of funds are used on payroll costs. So a few things, and I want to invite Ben to jump in because Ben told me this morning that he had a 2-inch stack of paper on his desk with all of the different changes in the guidance and the rules. It's certainly been a lot to get through.
Yeah, so I think really the purpose of this slide is just to kind of give everyone an idea, because I've heard a lot of commentary, oh, there are no answers, the SBA isn't telling everyone what's going on. I don't think that's entirely fair. The SBA has, obviously you can see by the dates and kind of the information here, they've done an awfully good job of trying to get information out. And every time they release new information, it just generates more questions. And never mind the fact that the SBA, in addition to trying to provide us all this guidance and everything else, is also trying to lead the charge to get $650 billion into the hands of small business people. So there's a lot of information. Yeah, my stack of paper is 2 inches thick, and it does not include the almost 400-page bill in its entirety. I've only printed out the relevant sections that really relate to the PPP part of the process. So there is a lot of information out there. We understand that it's overwhelming, and that's one of the reasons we're doing this. There's a lot of information. We're trying to help make some sense of it, but we still have things that we don't know. And candidly, as more questions are generated, it is causing the SBA to come back and sometimes revise earlier guidance.
Yeah, and I would add to that, this program was rolled out so quickly. It was basically rolled out in 1 week. This kind of thing would normally take a government organization like the SBA about a year. So I think they did an excellent job of getting this program rolling and getting money out to small businesses. But along with that came a lot of changes, a lot of uncertainty, a lot of clarification that's made it challenging from the business and the lender perspective to deal with. That said, I think as of now, we have a lot of the key clarifications that we've been looking for. And I would specifically highlight the loan forgiveness application that's available on the SBA website, which provides a lot of clarification and explicit instructions for completing the forgiveness portion of the application.
All right, so I'll jump in here. Those of you that attended the webinar on April 29th, which was just over 3 weeks ago, we had a number of significant questions that were unanswered, and made, sort of planning and making decisions to run your business very difficult. We've got some answers now, and we're going to kind of talk through each of these. So the 3 big questions that were still on the table last time around was, what is this economic uncertainty and necessity of a loan? How's the SBA going to interpret that? What does the bill mean when it says costs incurred and payments made? And how is the SBA going to interpret the full-time equivalence? And so, Stella, if you want to advance to the next slide, we'll jump into each of those and kind of talk through them.
Mm-hmm.
Okay. So economic uncertainty and the necessity of the loan. This, 10 days ago, everyone was going nuts about this. And I had conversations with a number of clients that were really concerned about, there were threats that the SBA was going to pursue fraud charges, and if you couldn't defend your position, here's what's going on. So about a week ago, the SBA released some information that sort of really helped calm the waters here and helped clarify. So in your loan application, you certify that the current economic uncertainty makes the loan necessary to support the ongoing operations of the applicant, your company. The SBA has announced that if your loan is under $2 million, you are by sort of definition considered to qualify for the loan. You don't have access to capital markets that would otherwise make funding and availability available to you. However, there are almost 34,000 loans over $2 million, and that's as of 2 weeks ago, but that's the most recent data. That doesn't mean that if your loan is over $2 million, you're sort of dead in the water. It simply means that that question can still be asked, and you need to be prepared to defend the reality that the economic uncertainty in your capital structure and everything else make the loan necessary to support your ongoing operations. So if you'll recall, in our last webinar, we talked about putting together a memo and documenting all of the things that are going on in your business and the decisions that you're making because of the PPP loan and because of the various facts that are going on. Just document that. And it's simply one aspect. So we know that if a loan is over $2 million, the SBA is going to review that file before forgiveness is granted. Just be prepared for that, and be prepared to demonstrate the necessity of the loan. The best news about this, though, is the SBA's clarification and guidance on this also capped the downside risk for borrowers.
Yeah.
Basically, what the SBA has said is, first of all, if you're under $2 million, there is no risk that you didn't meet this certification. If you're over $2 million and the SBA determines you didn't need the loan, they're just going to make you pay it back. So this whole safe harbor about, if you pay it back by May 14th or May 18th, nothing bad's going to happen. Well, the SBA has now said nothing bad's going to happen, period. If we decide that you've got no downside risk, we're going to tell you to pay it back. You pay it back. It's done. There's no fraud charges that are going to be pursued related to this issue or anything else like that. So I think that's the best news for large borrowers. And obviously, it's great news for small borrowers too.
Yeah, absolutely. And I'd say the updated guidance from the application itself is still relatively vague. So the specific language they use is that an applicant may still have adequate basis for making the required good faith certification based on their individual circumstances in light of the language of the certification and SBA guidance. And so, when you look at how this is going to be interpreted, it still seems very vague from the SBA standpoint, and it's very subjective with relation to this certification that we have in quotes here. And then subsequently, I think having the downside to repayment of the loan is going to put a lot of people at ease with respect to personal liability or fraud as a result of participating in the program. And then finally, the SBA did include in the documentation requirements that the borrower or applicant should retain documentation supporting as to the necessity of the loan request and the applicant's eligibility for a PPP loan. So I would say, in the past, we counseled to probably prepare documentation showing your necessity to access the program. And now that's been made explicit that you should expect to have documentation, especially if you're over $2 million in loan proceeds, that shows why you feel that accessing these funds was a necessity.
All right. So another really good piece of news that came out in this application is the SBA has clarified what they mean, what the bill means when they say costs incurred and payments made. And what they really said is it's costs incurred or payments made. So as participants in this program, you're going to get the best of both worlds.
Yeah.
So, just to kind of dive into this a little bit, you've got, let's talk specifically about payroll costs first. So, a lot of people were concerned of, hey, I got the loan in the middle of a pay period. Let's, just for ease of discussion, let's say we pay on the 15th and the 31st of each month. And we got our loan on April 10th. Well, when I pay on the 15th, I'm paying for work from the 1st of the month through the 15th. Do I have to prorate that? Everything else? The answer to that is quite simply no. The SBA has been very clear. They've said the day that paychecks are distributed or funds are deposited to an employee's account in a direct deposit, that is the day that the funds are paid. And you get to take credit for 100% of all of the payments that you pay during your forgiveness period. Then we move on and it says you're also allowed to account for wages that are incurred but not yet paid, as long as they are paid in accordance with your regular payroll cycle. So in that example we just used, we got our loan on April 10th. Our cycle is, we pay on the 15th and the 31st of each month. So the end of our cycle, our 56-day cycle, would be June 4th. Well, I've paid people through May 31st, but then I also get to count the wages and salary that they would earn on June 1st, 2nd, 3rd, and 4th, the last 4 days of my 8-week period, as long as they are paid in accordance with the regular cycle. So as long as I pay those wages on June 15th, I get to take credit for the wages for those 4 days. So in practice, what the SBA has done is, even though they've limited it to an 8-week period, in practice, many folks are seeing that they're going to get 9 or more weeks worth of wages included, depending on the specifics of their pay cycles and everything else. So it's a really nice benefit for participants in the program. You got anything to add to that, Riley?
Yeah, and I think this is one of the key concerns that everyone had going into the 8-week period was, how do we account for our payroll cycle not matching up perfectly with the 8 weeks? And I think the guidance that was included in the application really solves this issue for everyone. It makes it a lot easier for compliance purposes. It basically makes it so your business can continue its normal payroll schedule, how you were doing it before. And then at the end, you can account for other incurred payroll costs also. So I think this really is the best of both worlds.
Yeah.
And it really does resolve it in a way that's very friendly to participants in the program.
Yeah. And you're exactly right. Yeah. Those of you that have been asking, should I do a special payroll run on the last day? You don't need to. This issue resolves all of that for us. And for those of you that are wondering about the alternative payroll period, if you're aware of that, we'll talk about that later in the presentation as well.
Mm-hmm.
So then sort of moving to the next topic, or the next component. So for non-payroll costs, the application confirms for us that they are paid during the period or incurred during the period and paid on or before the next billing cycle. So this, we're talking about rent, interest payments, etc., utilities, all of those things. So you even get, let's say, again, using the example of my period ends in June, if my June utility cycle is from June 1st to June 30th, and I pay it, I get the bill on July 10th and pay it, I can actually account for those first 4 days, prorate that July 1st bill to include the first 4 days of June, and include that as well because I incurred those costs. Now, depending on your business and everything else, that may not be a real material number, but the question of anything paid in the period. So in early April, right after I received my loan, I paid my March utility bill. I paid it during the forgiveness period and I get credit for it. So again, you can very likely pick up more than 8 weeks worth of rent and utilities and everything else, depending on the dates involved in the cycle. I will sort of remind everyone though, that yeah, you don't get your full June, again, in my example, you don't get your full June utility bill because a large portion of those days will be after your 8-week period ended. So make sure you prorate. The application is also very clear that you don't get to count costs as both paid and incurred if both things happen in the month. You don't get to double count anything. I think it's pretty straightforward.
Yeah. One other thing I'd point out, in the actual language of the application document, there's some confusion over how they use the word and or. And I think it's clarified in the body of how they determine covering both cost paid and cost incurred. So when you read through that, make sure you read the whole body of it as opposed to any one sentence, because the ands and the ors can be confusing. But I'd say the way it's interpreted on this slide right here is accurate in my understanding.
Great. Next slide, Stella. All right, full-time equivalents. The SBA proved me wrong on several things that we said in the last presentation, and this is one of them. I was speculating that the SBA would use the 30-hour per week requirement for an FTE, as they've done with prior programs, but they have explicitly defined an employee, a full-time equivalent, as an employee working 40 hours or more per week. And so if you've paid attention to the program or participated in our previous webinar, you know that there's this forgiveness ratio that's based on the number of full-time equivalents in the base period, and the number of full-time employees in the forgiveness period. And that ratio impacts the amount of forgiveness that you can get on this loan. And so we've now got some guidance on how to calculate full-time equivalents. And it is very clearly defined as 40 hours per week, rounded to the nearest tenth. So, that's the math. Each employee is tracked and accounted for in that methodology. They also give us a simplified methodology where you can see as the second bullet point, you can just basically, anybody who doesn't work 40 hours counts as half a person. They count as 0.5 of an employee, and anybody working 40 hours or more counts as 1. If you use that simplified methodology, you must use it for both the base period and the covered period. You don't get to sort of mix and match to come out with the most positive outcome for yourself. You should be consistent in your application. But I think the calculation of a full-time employee is pretty straightforward now that they've defined it for us.
Yeah. So Ben, one thing that I would add here is you are not forced to use the simplified calculation method. We've gotten questions around that. And then one question I'll pose to you, Ben, that I saw was, can you theoretically have more than one FTE that is attributable to one full-time employee?
Gotcha. Yeah. So you've got somebody who works 50 hours a week on a regular basis. No, in either methodology, you are capped. One person cannot represent more than one FTE, period, end of discussion. I don't care if they work 100 hours a week. They are still just one FTE. And you're right. Yeah, the simplified method
Yeah.
is not required. If you've got people that work 32 hours a week, they work four days, 8 hours a day or whatever, that is 0.8 of an employee. And you can use that if you've got a lot of employees that work, in that, call it, 25 to 35 hour range, it is unlikely that you would want to use the simplified method, because you'll want to maximize the count for all of those employees that work, 30 hours a week or whatever it is. The other side of that equation, if you've got a lot of full-time employees and a handful of people that work 10 hours a week, the simplified method may be a better option for you, because all those people working 10 hours a week would count as a half employee each. But again, the other piece of this equation is use the same methodology in both the base period and the forgiveness period. So the likely outcome for most people is going to be relatively similar.
Yeah, exactly. And I would add to this that most people, when they completed their first application, they put an employee number on the application and they didn't necessarily use the same methodology. So I would anticipate that a lot of businesses may have minor discrepancies between that number on the original application. I think as long as you can accurately document that the figures you've calculated for both the base period and the covered period are well supported when you submit the application, if that number differs from the number on the original PPP application, I don't think that should be a major issue.
Yeah, I agree with that. In fact, the original application didn't even, it asked for number of employees, not full-time equivalents. So by definition, they're two different numbers.
Yeah, good point.
Riley, you want to take the lead on walking us through this one?
Sure. So bringing everyone back to a slide that we've had in two previous webinars, and I know we went over this before too. This is directly from the legislation itself and is actually still relevant. So I think before we go too much into the weeds on this particular slide, the application document itself is designed to help you make these calculations. So it will be a little bit easier than having you interpret this type of equation yourself. But I think the main points here are we're looking at the sum of the approved uses of funds, which would then be reduced by a reduction in the number of FTEs. And there's a key piece of this, which is the reference period you use for calculating that FTE reduction. So the first one would be from February 15th, 2019 to June 30th, 2019. And the second one would be January 1st, 2020 to February 2020. There's also a separate option for seasonal employers. If you have fluctuations in employees and you're concerned that whatever amount you use will show a large FTE reduction, maybe you should look at the calculation methodology for seasonal employers, and it could more accurately represent where your business is today in terms of FTEs than the other methodologies. The other important piece here that we're going to touch on, and this is actually clarified significantly by the application, is the potential reduction for reductions in wages. I would also say that and we've noted to use caution on this in the past, but there is a safe harbor for reductions in employment or wages between the period of February 15th and April 26th. And I would say that period has been updated. But this safe harbor, where if you bring back employees or increase wages by June 30th, has been clarified, and we'll go into more detail here also.
Yeah,
anything else to add on this slide, Ben?
Yeah, just a quick comment. There's sort of a double whammy on this. The way this calculation works, and I just want to make sure everyone understands it. The top portion of the slide, we've got this sort of everything that we spent the money on, and then adjust based on the full-time employee ratio. And then you layer on top of that. So let's say we started with $1 million loan. We had we had a 20% reduction in our headcount. We spent all the money, so we only get $800,000 of forgiveness. But then you take the second step, which is the reduction related to a reduction in employee salaries, and then you deduct that whatever reduction results from that from the 800,000. So you really do get sort of smacked twice in the calculation for reducing employee salaries. We've got some good news on that and clarification in that area, but I just want to point out that I mean, in effect, when you reduce wages, you get hit twice in the way the calculation works.
Yeah, exactly. That's a good point, Ben. So moving on from here, we have also a number of FTE reduction exceptions. Ben, you want to go through some of these?
Sure. Yeah. So more good news. If you go through the kind of the worksheet that the application includes, and recent Q&A information that's come from the SBA, one of the great things that we've learned, because now we're all competing with the federal government for employees because they're paying more in unemployment than we were paying in wages. But a laid off employee that is offered a rehire and rejects that rehire offer, they are excluded from, you don't get dinged for it. So you get to count them as one FTE, even though they don't work for you. The requirements are you have to make a good faith written offer. So it has to be in writing. The offer has to be in writing, and it has to be at the same wage and the same number of hours. So those are key components. But if you make a good faith written offer at the same wage and hours, and they reject it, you get to continue to count them as a full-time employee in your FTE calculation. Their rejection does not have to be in writing. You don't have to make them come and sign something. Obviously, non-employees would not be particularly helpful in doing that, particularly if they think it's going to jeopardize their unemployment benefits. But the rejection of the offer must be documented by the borrower. So you as the employer have to have a written offer at the same wages and hours. And once they, and if they respond, you talk to them on the phone, they reject it, you send them a text, or they text you back and say it's rejected, they email you, whatever it is, simply document it. If you have a telephone conversation with them and they say, no, I'm not coming back, just write a little memo to the file that says, on this date at this time, I spoke with this person. I offered them the same job, and we mailed them a written offer. They rejected it, and our documentation is complete. We're also not penalized for employees that are fired for cause, employees that voluntarily resign, or employees that voluntarily requested and received a reduction of hours. So all of those folks, so let's say I have an employee that was working 40 hours a week, and then they said, you know what, my kids are at home, I'm trying to help them with school and everything else, I need to reduce my hours to 24 hours a week. I can only work 60%. Normally, if I forced them to go to 60%, they would count as a 0.6 FTE in the calculation. But if they requested it and received a voluntary reduction of hours for personal reasons, for whatever reason, I get to continue to count them as a 1 FTE. So it's all about sort of who drove that situation. I will also point out that we get to continue to count them as FTEs in our calculation as long as they are not replaced. So I don't get to go out and hire a new person to replace the person that was fired for cause and count both of them as an FTE during the period. I don't get 2 for 1 for that same position. So just something to be aware of.
Yeah, and I would also add, and I think this was touched on, but this only counts if the position was not filled by a new employee. So you also can't double count something if you let someone go and replace them directly. You also need to be cognizant of the fact that you can't just necessarily use a blanket exception for people that you fired for cause or offered to rehire that didn't come back.
Yeah, absolutely. Okay, so we talked about the safe harbor, and this is so those FTE exceptions that we just talked about help with the safe harbor situation. But let's sort of kind of continue the conversation. If we had FTE reductions between February 15th and April 26th, we would likely be dinged in our calculation. There is an exception that says if by June 30th, 2020, we've restored our FTE levels to the same number of FTEs that we had during the pay period that included February 15th, 2020. We will not have to apply that ratio. I've seen a number of questions of, well, what if I get back to that level on June 30th and then lay them off on July 2nd? Yeah, that probably meets the required criteria. I don't know that that meets the spirit of the bill. That's not to say that you can't lay people off. We understand these businesses are dynamic and everything else. But the requirement to meet the safe harbor is your FTE level must be at or above your FTE level on February 15th, 2020. This is a binary choice. It's you either meet the criteria or you don't. So if I had 100 employees on February 15th, 2020, and I have 99 on June 30th, I did not meet the criteria. And the calculation applies. If I have 100 employees on June 30th, I meet the criteria, and it appears that the ratio portion of the calculation just disappears.
Yeah, and I think this is a relatively strict caveat for businesses that were hit especially hard by COVID-19 early on. I think this could apply to things like restaurant businesses or retail businesses where you were forced to close, you immediately laid off all your workers, you got PPP funds, and then we're looking at this thinking, well, I'm hiring people back, but I might not be able to do it right away because the economy isn't back to normal and I don't have work for everyone. So there's an exception here, but as Ben points out, it's a binary choice. You really do have to get back to February 15th levels by June 30th, or else this exception no longer exists for you. So if you do intend to take advantage of this from FTE reduction, you do have to be very careful that you do it correctly. Otherwise, you'll be subject to the full forgiveness reduction calculations.
Yeah. I'll be honest, the conversations that I'm having with people, this is not something that I would strategize and plan on fulfilling. I would be very leery of making this my sort of primary plan. If things work out and I get there and it benefits me, great. But I would not be running my business to take advantage of the safe harbor personally. That's just Ben Brown's opinion.
Yeah, I agree. And I think that's echoed across a lot of businesses. It implies a lot of volatility in your employee numbers. And if, for example, your business really isn't fully up to speed yet, if you're rapidly going and trying to rehire all your employees and then strategizing to lay some off after the fact, that's going to be an extremely difficult and time-consuming process and difficult process for your employees also. So I'd say if you intend to look at that safe harbor exception, just be careful with it.
Yeah. Okay, so this next piece, and actually, Stella, could you jump back, 3 slides to the kind of that calculation table? That one, yes, thank you. So this next slide, we're really talking about the bottom portion of this, and it's sort of the second cut that you take on wages. And when the bill and everything came out, it appeared that we were talking about wages, reductions of wages that are greater than 25%. So if I reduce employees' hours, I'm going to get hit with this adjustment. Stella, if you want to advance back to that slide for us, please. Thank you. The great news that came out of the application is we only have to compute this for employees whose salary or hourly wage were reduced by 25% as compared to Q1 2020. So if I was paying somebody $25 an hour in Q1 2020, and I reduced them to $24 an hour in 2020 or during this period, I'm fine. It's just to the extent that I reduce their wages, and it's the salary or the hourly wage rate, not the hours. And I think that's a great relief for at least a number of clients I've spoken to who were thinking. And that's how I interpreted it the same way based on the original language. I was interpreting it as a reduction in hours of more than 25% would cause their wages to decrease by more than 25%. You'd get dinged with this. We've got clarity that that's not the case. It's just the salary or wage rate. So that's very good news for a lot of people. Anything to add to that, Riley?
No, I'd say that's a good point that you make around the hourly wage rate. Also, one thing to consider with this, I've heard questions about people with differing hourly wage rates. Should you use the, I guess, original rate or the true rate? And should we use that or salary? I think this is a question that we'll probably be able to help you with. From a bank perspective, it's challenging for us to get into a lot of these detailed questions on specific decisions. And this is probably a good moment to bring this up. Ben and I were discussing earlier about at the end of the day, when you submit this application, you're inputting these numbers and putting your signature on it and making a number of certifications that you believe all of these numbers to be true and correct. So at the end of the day with this application, you are really responsible for the decisions. And there's a lot of things in here that your lender may not be able to advise you on, and there might not be full guidance on. So when it comes down to getting to the bottom of each of these numbers, you can rely on your advisors to help you get as close as you can. But for a lot of these things where there might not be explicit guidance, you're going to have to make that judgment call and make sure that you believe that it's the right decision before you submit your application.
Yeah, I 100% agree with that. It's we've received a lot of guidance, but we're all going to have to make judgment calls for our business and what we think is right. And you know, I don't know, for those of you that attended the last webinar that we did, we talked a lot about acting in good faith and you know, making appropriate decisions. I think we all have a pretty good sense as we go through and you look at the detail. You're obviously you're participating in this webinar. You're trying to be educated about the issues, and eventually we're all going to have to make some judgment calls. And if when we make judgment calls, we all know, you know, when this is pretty clear. Yeah, this is maybe not really clear, but I still think it fits within the spirit of the program. And when it's this is a stretch. And to me, that's where I would draw the line, is if I feel like it's a stretch, I'm not going to include it. If I feel like it's not clear, but it's within the spirit of the program, I personally would choose to include it. That's how Ben Brown would handle it if he were going through this process. You know, but ultimately, you've got to sign your name on the forgiveness application and certify and make the required certifications that you've done things in line with the program.
Yeah, and I would also touch on lender perspective. It really does vary by bank, the level of detail that these applications will be scrutinized with. I know a lot of larger institutions, a lot of that process is automated where you're submitting this to report. And I know a lot of community banks, now that we have time to prepare for this PPP forgiveness application, are evaluating more automation in terms of the process. And there's a lot of services that are being provided to do that. And so each bank may take a slightly different approach for which numbers they look at. Some banks may require you to revise a certain way. Some banks may accept what you provide, but at the end of the day, you're responsible for it. I would say, regardless of whether your bank will accept doing it one way or another, it's on everyone to make sure that you attempt to complete the application as accurately as you can and in accordance with the rules of the program.
All right. So one additional thing that came out of the application is for payroll and payroll related costs. So this does not apply for rent, utilities, interest, etc. But for payroll and related costs, meaning retirement and medical benefits, we can now choose. So the original definition, your covered period, your period of forgiveness, is the 56-day period that begins on the day your funding is received. So the application actually gives an example that if you received your funding on Monday, April 20th, your last day of forgiveness is Sunday, June 14th. I know some people were counting through to Monday, June 15th, but we now have clarity that, you know, it runs from April 20th through Sunday, June 14th. And my interpretation of that is all payments made from 12:01 a.m. on Monday, April 20th through all payments made at midnight Sunday, June 14th, would be included. So then we move to this alternative payroll covered period. First of all, the alternative payroll covered period is only allowable if you have biweekly or more frequent payroll. If you have a semi-monthly payroll, you do not appear to qualify for this. But what this alternative payroll period does is it allows you to defer the start of your 8 weeks to the first day of the first period following the date that you received your funding. Again, this is payroll and benefits only. And if you elect to use the alternative payroll covered period, you must use it for both payroll and benefits. You can't choose, I'm going to use the covered period for payroll, the alternative covered period for benefits, or vice versa. You've got to apply them consistently. I will also tell you, don't assume that one is better than the other. I've done the math with clients, and for some, the covered period allows them to capture more days of payroll than the alternative payroll covered period, and vice versa. For other clients, depending on when they receive their funding and what their pay cycles are and when they pay, the alternative payroll covered period allows them to pick up more days. Again, this covered the sort of standard versus the alternative payroll periods are really important, given we're allowed to include payroll costs that are both paid and incurred. And so do the math, look at what's more beneficial to you, and go from there. I had an interesting conversation with a client yesterday where we were kind of doing this math, and we determined that the alternative payroll covered period would get them, I think we decided it was 3 or 4 additional days of payroll. But we also realized that for them, they pay a large amount of union benefits, and they happen to pay it on the day that they received their original funding. And we quickly realized that the value of including that, because we've got to be consistent, could very well outweigh the payroll period or the additional days of payroll allowed in the alternative payroll covered period. So your decision on which period to use, pay attention, do the math, and figure out which is most advantageous to your business.
Yeah.
And make your decision. But don't assume that one or the other is the right answer for you, because it quite candidly depends case by case and business by business.
Yeah, and I think the spirit of this also from the SBA standpoint is just making it logistically feasible for most small businesses to comply with the program and comply with the forgiveness application without too much extra work. Because while some businesses may have the ability to choose between one or the other relatively easily based on the previous guidance, it was really challenging and very concerning for companies that had a material mismatch between their payroll cycle and the 8-week period. And so I think this really does make it a lot easier to comply with. That said, now that it's been expanded a little bit, it does provide an additional consideration, as Ben went into detail on, for what's the most advantageous conclusion for your business. And so in the past, it really was, how do we comply with this? And now it really is, okay, what's the best way to comply with this to maximize the forgivable loan amount?
Yeah, absolutely agree. All right. So we've got a bunch of, so there are a number of common questions, and I'll try to move through those. We've identified a handful. I see a number of questions that have been sort of inserted in the Q&A. Before we sort of dive into these questions, Stella, do you want to kind of give a wrap for everybody? You're muted, Stella.
And that's all I have to say about that. Thank you very, very much for all of this information. It's very valuable to be able to hear things in a way that makes sense, and so I appreciate that. Did you want me to go ahead and just talk about our upcoming webinar before I hand it over to you?
Yeah. Why don't you go ahead? You can advance to the next slide and talk through that, and then we'll jump back to this slide and hit the Q&A.
Awesome, thank you. So next June the 3rd, we have a webinar called Getting Back to Business, Building Your Net to Minimize Your Risk. And it's more of a panel discussion, and we have it moderated by Kim Silvers, who's one of our technical advisor members and also serves on the programs committee. And she's compiled a group of people to talk about the like how to move back into this phase 2 of reopening and some of the things to think about when it comes to onboarding your employees and your customers. And there's going to be plenty of time for Q&A for that too. We have more information on the website at catfamilybus.org. I will be sending out an email with all of these details along with the PowerPoint presentation that we have today right after this presentation is over with, and also the link so that you can re-watch the webinar that you're presenting now or forward it to people in your family business that could benefit. So back to you guys.
Thanks, Stella. Okay, so like I said, we've identified a handful of questions that are very common that Riley and I are both receiving from clients, or candidly that we saw a number of sort of repeated questions in the registration information. We've sort of compiled those here. We'll address each of those. And then to the extent that we've got time and you guys want to stick around, we'll dive into the list of questions that we've got. I see we've got about 50 questions right now, and we'll answer as many of those as you can. I know I can stick around till about 11:30, and so we'll answer questions till you're out of questions, or we get to 11:30. So the very first question is, what is the status of the income tax implications of the program? For those of you that have been following and paying attention, Congress said that the forgiveness of the loan is tax-free. And I don't know, those of you that participated may remember that I sort of speculated on this, that there's a possibility that the IRS could come in and sort of make the expenses not deductible. That would be consistent with something they've done, but I just didn't think that they would do it. Well, the IRS literally waited 2 days to make me a liar. 2 days after our last presentation, they came out and said, the tax forgiveness or the loan forgiveness is not deductible or is not taxable, but any expenses you pay with the loan are not deductible on your tax return. Effectively, the IRS turned around and made the thing taxable. So as of right now, we know that in the state of California, California has already said it is a taxable event. So you will pay taxes on the forgiveness in California. Currently, the IRS has effectively made it taxable for federal purposes as well. By removing the deductibility of all of the expenses, they essentially generate less deductions that you would otherwise be able to take and make the forgiveness taxable as well. I do not believe that we have heard the end of this, at least on the federal side.
Yeah.
Chuck Grassley and Richard Neal, who are the chairman of the House and Senate Ways and Means Committees and sit on opposite sides of the aisle, they came out and issued a joint statement that said the IRS is out of line. This was not the congressional intent. When they said that it was supposed to be tax-free, that's what they meant. And there's already been talk about passing a bill to explicitly include the expenses as a deduction as well. We don't have, I don't. We won't get an answer until we have an answer on this. And the good news is we have until, when we file our tax returns next year before it has to be resolved. But as of this moment, you should plan for it to be taxable for both federal and state purposes. Another question is, what documents are we required to submit, and kind of what's the timing of when the application needs to be submitted? There is actually a really good summary right on the application on page 10. It tells you documents that each borrower must submit with its PPP loan forgiveness application, and it goes through. But one of them is your payroll tax reports for the periods that are involved in the forgiveness. So I've had some clients who have told me that they want to, on the last day of their 8-week period, they want to submit their application. And I understand that desire, and that's all fine and good. But the SBA has told us that we must submit our quarterly payroll tax filings as reported, or that will be reported to the IRS. And so that's your Form 941. And you also have to submit your state quarterly tax return, your DE9. So you can't know what's going to be on those forms until the end of the quarter. It's just not possible. So in my mind, I don't see how someone would be able to submit their application until sometime after June 30th. Um, you know, like I said, you'll have to work with your bank and you'll have to figure out what you specifically want to do. But that's, we know one of the documents that you must include, and the rest are there. You can read it right in the application. But I don't see how someone would be able to file their forgiveness application until their payroll tax returns are at least prepared. They don't necessarily have to be filed, but it has to be prepared. You got anything to add to that, Riley?
Yeah, that's a great point, Ben. I mean, we get this question all the time. When do we apply? What's the deadline? How early can we do it? And it really is limited by your ability to collect the required documentation. So it's tough for a lender to give you a date. You know, we're going to be available for applications as soon as we can, but we also recognize that the earliest this could occur could likely be a ways down the road. So that's an important thing. I'd also say with documentation, there's three main categories to keep in, and all of this is, like Ben said, explicitly included on page 10 of the application. And that's really why we didn't put it in this presentation, because it's so clearly out there in the application that I think it's probably sufficient just to reference that document. But there's a few categories to keep in mind. One is payroll. That's relatively straightforward in including the tax filing documents. Two is documentation of your FTEs. And that may look a little bit different by business, but that's something that you need to keep in mind. You need to have explicit documentation of your employees that you're able to submit with your application. The third thing is non-payroll. And this is a little bit more intensive than many people would have originally thought. And this applies to business mortgage interest. And they actually explicitly say business mortgage interest, business rent, business utility. And for each of these, they're essentially looking for account statements or documents from February of 2020 through 1 month after the end of the covered period, along with proof of payment, basically, of these funds or invoices. So this is something where, for example, if you're looking to push up rent payments all into the covered period, it's probably not the best idea and maybe not something that you will be able to sufficiently document. So take a look specifically at that section. Another key piece of the documentation page on the application that I think is worth noting is that it basically states that you're required to keep all of your documentation for your use of funds and forgiveness under the PPP program for 6 years after the date that the loan is forgiven or repaid in full. And so basically you're required to keep those and also permit SBA representatives to review those if they request to. So it's a pretty long period. And this component also includes documentation supporting your certification of the necessity of the PPP loan. So when we talk about documentation, this is something that you will probably want to pay attention to, compile in full, and then take note of the things that need to be submitted, but also that other things are required to be prepared by you and kept on record in case you do get audited. Moving on from there, what can you tell us about 401k plan contributions, Ben?
Yeah, so I'll actually kind of take 401k plan and union retirement contributions together. So the application tells us explicitly to include the total amount paid by the borrower for employer contributions to employee retirement plans, excluding any pre-tax or after-tax contribution by employees. So my interpretation of that, the way I read that, is very simply, it appears to be a straight paid. It doesn't say paid or incurred or anything like that. It just says enter the amounts paid by the employer, paid by the borrower for employer contributions to employee retirement. I interpret that to mean that your union health and welfare benefits, as well as your union retirement, they're addressed in two separate lines, and any matching 401k contribution type contributions that are made during the forgiveness period are eligible for inclusion in your submission.
Yeah, and I would also point out on the payroll cost definition the application itself references the April 2nd interim final rule, and it provides a link to it. So you can actually go and look at the specific language that is referenced in there. And so on this piece for components of payroll related to benefits, it says specifically, in quote, payment for vacation, parental, family, medical, or sick leave, allowance for separation or dismissal. So in addition, there's a couple other things for group healthcare coverage, including insurance premiums and retirement. But that's language that you can reference specifically through a link in the application if you want to go back to it later.
All right, workers' comp insurance. This one, we keep getting this question, and unfortunately, we still don't have an answer. The SBA has not addressed it. I have heard that the SBA intends to address it. I honestly don't. I'm taking that with a very heavy dose of salt at this point. I suspect that you probably won't get an answer on workers' comp. And unless we get a direct answer, I think that is one of those things that's in a gray enough area that everyone's going to make an individual assessment and determination of whether that is an employee benefit or a company insurance cost. I think if it's a company insurance cost, it does not qualify. If it's an employee benefit, a health or welfare type benefit, it qualifies. So you'll need to assess your business and what you do and how that works and make a determination, because I just don't think we're going to get an answer on it personally.
Yeah, this is a tough one. And this is something where if you look on the internet, there's a spectrum of different opinions. Most of the opinions I've seen say that as the guidance and language stands now, it should not be included. But again, that's something that is up to interpretation until we have explicit guidance on it.
Yeah, I think I could make a pretty strong argument for both sides, but I agree with Riley that I personally would not include it. How about that? That's Ben Brown's opinion.
I think not including it is definitely the safer approach. It's just a question of, do you feel that there's significant justification out there to include it? And I think as of now, it's definitely up for debate.
Yeah.
So now the next question, and I think these next two are together, about the possibility of extension of the 8-week period or a change in the 75%, 25% ratio requirement for payroll costs. I lump these into the category of speculation on what's going to happen in Washington. And with the number of changes that we've seen so far with this program, I have no idea of predicting when or how this could happen. What do you think, Ben?
Yeah, I agree. And honestly, I think it's important to distinguish between these two. The 8-week period is actually written into the law. And so to change that 8-week period, it will require an act of Congress signed by the president. The possibility of changing the 75-25 ratio, I think, is actually much more likely, simply because the SBA came up with that rule. It's not explicit in the law, and there's been some congressional pushback of that's not what we intended. So if I had to handicap these two things as a bookie, I would say that there's a greater probability that the 75-25% ratio will change before the 8 weeks are extended. But I'm sure you all have heard Marco Rubio has been vocal about this, has met with Secretary Mnuchin on it, about extending the 8-week period. But until it happens, I don't think you can bet on it. And candidly, same thing with the 75-25 ratio. I don't think you can bet on it.
I think you make a great point, Ben, about I would agree that there's a higher likelihood that the 75% requirement was lessened before the 8-week period, but it's really hard to say. And I would also say anytime that we're relying on Marco Rubio's Twitter for information about what we expect with the program, something is wrong. And candidly, there have been many times in the past 2 months where the people on my team at the bank have actually checked Marco Rubio's Twitter to see what he says, because a lot of that stuff has ended up coming true. So, it's impossible to say. I think there is some sentiment towards hoping to alleviate these two things in Congress, but it's really difficult to know when or how that could become a reality, and it's all speculation until it happens. So for now, my opinion is that the approach is to proceed with the program based on the current set of rules, the current application form, and the current expectations. And if these things do come to fruition, that will be an added benefit for you. But in the meantime, I think it would be a gamble to bet that either of these two things was going to happen.
Agreed. All right, bonuses and raises. This is a very common question. I think we had it 5 or 6 times in the registration questions. So can you pay bonuses to your employees? Can you give them raises to increase your spending during this 8-week period? I guess the answer to that is there's no prohibition on it. I've not seen it anywhere that would prohibit that. You're still capped at the 15,385 and that's one thing that actually we haven't touched on. Even with the extended periods and everything else, it appears for all intents and purposes that we are capped at 15,385 of eligible wages for the employees, for each individual employee. So, like I said, I've yet to see anything that prohibits it, and I haven't seen it because it's not out there. But just be aware that to the extent that you're granting bonuses to employees, that you're still going to be capped at 15,385, and that's all compensation, all cash compensation, be it bonus, commission, payroll, tips, wages, whatever you want to call it.
Yeah, and I would add to this, we've gotten a number of questions from people who may be an owner and also an employee of the business. And I would add that the application explicitly states that forgiveness for any amount paid to owners, including owner employees, self-employed individuals, or general partners, is capped at 15,385, the 8-week equivalent of $100,000 per year. And if you're thinking about distributions or other types of compensation that you may be giving yourself as the owner, I think you do need to take a close look at this, because this is something that is very heavily focused upon in the application, and something that I believe you're required to make a certification on when you do submit the application. So although this wasn't very explicit early on in the PPP application process, it's definitely gotten a lot more attention now. So look at your own compensation if you are the owner of the business as well.
Yep. Yeah.
Some other tricky questions: housing, gas, and hotel costs. What do you think about these, Ben?
So we actually have an explicit response in the Q&A on question 32 of the Q&A. Says, does the cost of a housing stipend or allowance provided to an employee as part of compensation count towards payroll costs? And the answer is very simply yes. And then it discusses why. So I think the big thing here is, what are we providing? I think housing allowances and auto allowances that are part of compensation, meaning they show up as wages on their W-2, are allowed as part of payroll. I do not believe that reimbursements for mileage or hotels when somebody's staying out of town, I do not believe those count, because quite frankly, they're not wages paid to that employee. They're simply reimbursement for costs that are incurred. You get into a gray area with per diem. Is it a reimbursement? Is it a wage? To me, the standard that I would use is, if it shows up as taxable wages on the employee's W-2, it counts. If it does not count, if it does not show up as taxable wages on the W-2, it does not count. That's the standard I would use on all of those types of questions.
Yeah, that's a good point. So now that we have reached the end of our presentation, I see that we have 63 questions in the Q&A. Fortunately, this is well below what we had last time. So
actually, I think we started at 80, but there were still like 60 left when we had answered those 80 questions.
Yeah, exactly. So it looks like Stella has marked a couple as answered. I like this game because we're going to play another round of Ask Ben. Ben, being the generous accountant that he is, providing us all of his knowledge, we'll try to get through as many of these questions as we can. I'll answer some of the bank-related questions as quickly as I can. We both have to drop off around 11:30, so we have about 20 minutes. We'll try to go fast. Ready, Ben?
Fire away.
All right, first one. If we're short by approximately 10% on the payroll costs, do we have to pay back the entire PPP loan or just the portion that we didn't use? Follow the questions for the loan forgiveness reduction on that.
Yeah, but I think the underlying question is you'll get forgiveness if you're short on the payroll costs. The math will come out, and you'll get forgiveness of 90-ish% of your loan. So if you got $1 million loan, you'll get forgiveness of 900,000. You will have to pay $100,000 back, but you don't have to pay back the rest of it. It's not an all or nothing question for forgiveness.
Yeah. So as it stands today, it'll be reduced if you don't meet the 75% threshold, but it'll just be reduced down to that threshold, not all the way.
Correct.
Looking for info on self-employed, no employee loan forgiveness. This is also a bit less robust in terms of SBA guidance. The application itself has a lot of info in there. I would take a close look as you go through it. It might make it a little bit easier for you.
I will actually also point you to, let me see if I can find it really quickly. There's actually a specific interim rule that came out that specifically addresses self-employed individuals and has a lot of good information on that. So if you go to the SBA website, there is a specific interim rule for self-employed individuals. I think we already answered the question on taxability.
Yep. We already answered the question on when you should be applying. Here's a good one for you, Ben. What's the definition of transportation within utilities?
Ugh, I don't like this question. And it's a good question. We don't have a lot of guidance on it. So
we don't know.
I will tell you my personal interpretation of this. When I think of a utility, I think of something that is, it's a public service that is provided to people. And we pay for sort of a quasi monopoly. When I think of what transportation in the utilities context might be, I think of like road tolls and bridge tolls and things like that. I don't think of I pay a trucking company to haul my product from point A to point B. That's, again, we don't have any guidance on this, but that's how I interpret it. I think this is going to be one of those questions that everyone's going to have to answer on their own and make their own determination. But as you're making that determination, I would recommend that you consider what is transportation in the context of a utility.
Yeah, exactly. Because it is in the utilities bucket. I would be thoughtful on that one. Next question. Can you deduct 1099 employee pay?
No. That's pretty clear that 1099 employees are independent contractors. They can actually apply for their own PPP loans and apply for their own forgiveness. But as a business that engages independent contractors, you do not get to include them.
Yeah. And we've gotten other questions around employment agencies or PEOs. There was some explicit guidance on the use of a PEO if it's required to be the employer of record. But I haven't seen much outside of that. So in terms of independent contractors, no, you would not be able to count those.
Yeah. If you use a PEO, it is a different situation, and we can have that conversation offline.
Yeah. Is there clarification on equipment lease rent?
So I don't know that there's been additional clarification, but what it means is that, yeah, personal property is available. So if you have a lease that was in place on February 15th, 2020, the rent on that personal property is eligible for forgiveness or for inclusion in the forgiveness calculation. But the standard is you have to have a lease agreement, and that lease agreement has to be in place as of 2/15/2020.
Yeah, and documentation of the payments.
Correct.
On a monthly basis too. I think a lot of people have been tripped up by those. The mortgage obligations component of the forgivable uses of funds isn't as clear as it could be, but it's generally covered under leases on, or mortgage obligations for rent or real property.
All right.
Here's another one. Would we be able to count temporary staffing agency employees?
I don't think so. Those employees are typically the employee of the staffing agency. It would be like a 1099 employee. The staffing agency would be able to take them. I don't think you would. I suppose if you had, getting into the weeds, if you had, if they were, again, that kind of goes to the PEO situation. So my general interpretation on that would be no.
Yeah, and I see it the same way, with the exception of the PEO caveat, explicit guidance that would provide for that, especially because they are technically, in my understanding, employed by that employment agency.
Yep.
Do you think they will expand this program to cover IT costs? It covers human capital. However, with today's business models, IT costs are a common overhead expense that can be significant. What do you
Yeah.
think?
I don't think so. There's certainly not been any guidance to this point that would indicate that that's the case.
Yeah, I would agree. I think it's probably too late to be adding things of that large
Yep.
category.
Uh, I think so. This question is about employees leaving. I think we addressed that. That we did talk about.
Yeah.
We get to count people that left on their own.
Yeah. Here's one for sole proprietors. My understanding is that the maximum loan is $20,833, of which $15,384 is apparently automatically forgiven. Is that your understanding as well?
So first, I'm going to caveat this with I've not spent a ton of time digging into the sole proprietor without employees data, just candidly because that's not my client base. So unfortunately, I'm going to say I'm not certain on this one. Sorry to the anonymous attendee that posted that.
Yeah, and I would say the same thing. We don't have quite as many sole proprietors who have applied for the program. There's also not as much guidance aimed at sole proprietors out there, but this is something that one, you should take a look at the application, because I know there is explicit language in there for what you can count, and it does provide a relatively broad set of categories for what counts.
Yep.
Here's another one. We got the loan about 2 weeks ago, and our business is still closed and not sure we are going to open in the next 2 weeks. Assuming we open, we may not even get staff back to work as they are getting too much EDD, regular pay plus 600 a week. So we may not be able to use payroll as part of the loan, but are still paying operational costs, rent, utilities, etc. 25% towards non-payroll is not fair in cases like us. Please advise.
Yeah. I don't have good advice, unfortunately. We did talk about the possibility of the SBA 75-25 ratio being changed. We will see if that happens. We've also, we talked about the extension, but yeah, unfortunately, the way things are currently written, this particular attendee is exactly right. We've got some significant challenges that they're facing, and the program is not working as intended for them. But the rules as currently constituted, the rules are what they are.
Yeah, I would add to that. The program is specifically called the Paycheck Protection Program. I think it was originally aimed at getting money out to workers who may otherwise be laid off through this process. I don't think it was explicitly intended to cover operating costs for small businesses that were closed without employees. So I know a lot of businesses are facing a similar challenge, especially the ones that are closed, for example, in the restaurant industry or retail. But this is something where at the end of the day, you're probably going to get quite a bit of free money. And if you're not paying it out to your employees, it would be logical that you would repay that portion of the loan. So I know it's challenging and there could be other changes, but you still have to follow the rules of the program as they are currently.
Yep.
What about paying a late rent payment that's past due during your 8-week cycle? Since it's being paid during the period along with the current rent, would that count?
I think so. Yeah, I think it's just pretty much a cash basis. I would not get out over my skis and try to prepay rent for June, July, August, and September. But I think, yeah, if it's due and paid during the, and it's paid during the period, I think it's appropriate.
What if your landlord is deferring your rent payments until January, adding the deferred payments into 12-month installments starting 2021?
I personally would continue to at least make my rent payments during the current period because I can get forgiveness for them, and then accept my rent deferments after that. And again, obviously, this is going to be a business by business question. If you don't have the payroll to support it, then I don't know that that's the right answer for you either. But yeah, I personally would certainly try to maximize my forgiveness by paying my rent at least during the forgiveness period and then taking advantage of the deferral later.
Yeah, certainly an option. Does incurred costs include prepaid? Sounds like we can basically use accrual basis instead of cash basis. Let's focus on the first part of that question.
Yeah, I would say not prepaids. Generally speaking, I don't think you're going to be able to um, prepay for multiple months ahead. Now, as an example, going back to somebody who got the loan in early April and their period ends in early June, is it possible that I could get April, May, and June rent all captured because I paid, my April rent on, I got my loan on April 10th and I paid my rent on April 10th, and then I paid my May rent, and then I pay my June rent on June 4th? Yeah, I think you could do that. Do I think that you could then also pay multiple other things way out there? No. And it's like I said, it is intended to capture things that are actually paid. So maybe costs that were incurred before the period, but paid during the period. And then there's the allowance for, you can also capture rent and utilities and whatnot that are incurred during the period, but don't get paid until later. And typically rent's prepaid, so it's not going to be in there.
Yeah, and keep in mind with documentation for those items, including rent, utilities, and mortgage interest, you're expected to provide monthly statements from before the program started through a month after your covered period ends. So there's going to be a lot of documentation around what your monthly cost is. And if you're gaming the system, I think it'll be pretty clear from documentation. So I would just be thoughtful about any prepaid expenses.
Yep.
Here's one. Can you define, clarify the base period? I believe this is in reference to the forgiveness reduction calculation. I think we clarified that in the presentation. There are different options for base periods that you can choose from depending upon your business. And so that's something you want to consider, especially if you're a seasonal employer.
Yep.
Next one. If an employee only worked full-time for 3 weeks during the period and then quits, does she count as a full-time employee?
So I think that goes back to the FTE calculation, and as long as it's a voluntary termination, I think you will not be penalized for it, but you don't get to double count it if you hire somebody to replace them.
Yeah, and I think a general thing I'll mention with a lot of these questions is from your typical business owner rational standpoint, a lot of these things sound like simple yes or no questions, but you really do have to go look at the defined calculation methodology of this program in the application to answer a lot of these questions. A lot of them aren't as simple as, can I logically do it this way or that way? It's really dependent upon specific calculation methodology.
Agreed.
Is FTE compared employee by employee, or can I increase some hours for some people in PPP, but decrease hours for other people as long as I have the same number of FTE in both base and PPP?
So yes. I think I understand what the question is asking. And yeah, the FTE evaluation, the ratio that we use for base period versus the forgiveness period is just based on total headcount. If you had 100 employees in the base period and you have 100 employees in the forgiveness period, your ratio is 100% and you're fine. If you had somebody who was working part-time in the base period and they're working full-time in the forgiveness period, that's fine, and vice versa. It's really just on what is the total for the forgiveness period and the base period.
Yeah. If we calculate our payroll on a 2-week pay period, do we need to break down each week, or can I use 80 hours?
I would be comfortable basing it on a per payroll cycle.
Yeah, I think what I've seen in the past is average per pay period. So if your payroll cycle is 2 weeks, you'd want to take the average of each of those weeks. How do you calculate FTE for a person hired midway through the 8-week period? They work 0 hours for the first few weeks, then 40 hours every week thereafter. Does that person count as one or less than?
Yeah, that's an interesting question. And I looking at the spreadsheets that the application gives, I understand why that question exists. So effectively, that person's going to count as less than one. But so if we use the example of we pay biweekly, and they don't exist in the first pay period, so they're going to count as 0 in pay period 1, but in pay periods 2, 3, and 4, they're going to count as 1. So over the entire 8-week period, that person will count as effectively 0.75 because they're 0, 1, 1, and 1. So over the 8-week period, that person will count as 0.75. Just that's sort of the way the math works.
Yeah, so there's another question about the FTE reference period. I think we've answered those already.
Yep.
Can you use PPP for back pay for a time period when the office was closed, social quarantine, especially if the office is now reopening and employees are reinstated?
So the guidance that we have is it's based on when things are paid or when they're incurred. So either or. So not knowing the details of this situation, but if it's payroll that's paid during the 8-week period, it would appear to qualify. The only caveat, again, remember you're capped at 15,385, and if we don't want to play games and try to, oh yeah, we had back pay. That's clearly not the spirit, and I don't think that's what this person intended. But just a side comment.
Yeah, but if you're doing something in good faith where you had to lay off your employees and they're struggling, and you bring them back, and you have these funds that you want to pay them for back pay when your office was closed, I could see a moral case why that would seem to be done in good faith. But again, you want to be careful around playing games with that type of a thing. What is the maximum compensation for any one employee? I think we've gone over that.
Yep, it's 15,385, and that math is based on $100,000 divided by 52 weeks times 8 weeks. Period.
Mm-hmm. Here's a good question. If you qualify for the FTE reduction safe harbor, can you still be dinged for reduced salaries? Or is the FTE reduction quotient automatically 1 if you reach the safe harbor definition?
I think you can still get dinged. Because it's really sort of 2 different protections for the employee. I will say I'm not 100% confident with that response, but that's, based on my understanding and sort of looking at it, I think it's really sort of 2 different mechanisms that are built into the calculation to protect employees from layoffs and salary reductions. And so I think even my interpretation of the FTE is only for the ratio, but the salary reduction still counts. And in the spirit of a paycheck protection program, it makes sense. Hey, I'm going to keep 100% of my employees, but I'm going to cut everybody's pay by 50% is in much the same way as I'm going to lay off half my employees. So that's what they're trying to accomplish.
Yeah. Next one. Are there any FTE exceptions available based on segments of your business that cannot be performed during the 8 weeks due to the existence of the virus?
Unfortunately, no. There is no sort of scoping or exception at this point. I know there's a lot of restaurant owners that would sure like that caveat too, but it doesn't exist.
Yeah, exactly. There's only exceptions around essentially firing someone for cause, people resigning, requesting reductions to your hours, or if you've made the offer to rehire someone and they've rejected it and you have documentation. Here's one regarding owners. If I included the 2 owners who are not given a W-2 in the initial PPP calculation, but are paid with monthly amounts, should I assume I should not have done that and leave the 2 off the new calculation? Both are still working daily.
So I'm imagining we're talking about maybe owners who in an LLC or a partnership, and you are allowed to include them, their wages. I've actually gotten this question a number of times, and I think it's because as people are looking at the application, there's an instruction that says, in filling out the spreadsheet, it says on line 1 for the employee, separately list each employee. Do not include any independent contractors, owner employees, or self-employed individuals or partners. That's true for that line, but later on in that same application on line 9, we include the amount paid to owner employees or self-employed individuals or general partners. So yeah, the partners that are engaged and working in the business, their wages, what they get paid still shows up in the application. It's just on line 9 instead of line 1.
Yeah, that's a good clarification. And I think that's relevant to a lot of small businesses. Here's a good question. If I need to justify the loan because it is in excess of $2 million, what types of indicators would they look at? Lost revenue compared to 2019, a reduction in bottom line? Do I need to show that I could not borrow funds? This is a great question and something that we touched on quite a bit in our last webinar. But what's your opinion, Ben?
Yeah, so I think the most important thing is contemporaneous documentation of what you considered. And all of the things that this person has asked about are absolutely relevant. I think looking at your current capital structure, what your expenses look like, what risks do I have in terms of lost revenue, what exposure do I have in terms of bad debt expense, potential uncollectability of receivables, potential customer losses, all of those things. You know, I'll be honest, I've worked with a number of clients to kind of review their documents before the safe harbor was put in place. And I've seen, multi-page documents talking about all of the factors that they considered as they went through. I don't think, I think all of those things are valid, and I would extensively document my justification for the loan if I were over 2 million.
Yeah, this is a tough one too, because there's nothing that explicitly says what you need. It's just up to everyone to prepare their own set of documentation to justify why they felt it was necessary to access the program. And you have to maintain this documentation on file for when the SBA plans to review it. So I would say the more you have, the better. You're essentially making your case to the SBA for why you needed these funds. If you laid off employees during that period unrelated to COVID, just a loss of contract that was awarded, for example, could we provide documentation of this and request exception for those FTE reductions?
Could you provide it? Sure. It's not going to do any good. There is no exception or out for that in the bill or in the program. So yeah, it's an unfortunate situation. The timing was bad for you, but there's no workaround.
Yeah, there's only a couple specific FTE reduction exceptions as the application and guidance stand today. So other general business operational related issues that may cause you to lay off workers does not count. Next question, how would we count an employee who is out on workers' compensation with an injury or was just put on FMLA?
Depends on who's paying it. So, and I guess I'm not sure if this question is with regards to payroll or with regards to FTEs. Oh, that's an interesting question. So, if they're out on workers' comp or FMLA and getting paid through the state, obviously you don't have any payroll costs. I think, boy, that's interesting. You know what? I don't want to answer that question because I'm not 100% confident in my response on how that would be handled from an FTE perspective. That's a really interesting one. If this person wants to follow up with me separately, we can have a conversation. But yeah. That's an interesting question.
Yeah, and I don't think that's explicitly included in the application or other guidance.
Yeah.
Do payroll-related costs include the fees for a payroll service?
I don't think so.
Yeah, I haven't seen anything that explicitly would include those, so I would assume not to. A previous webinar stated to calculate FTE based on 30 hours according to ACA. Now you are saying the FTE calculations are 40 hours.
You have to call me out on my bad speculation last time, huh? Yeah. So last time that was my presumption, and I think we tried to be clear about that in the previous webinar that we didn't know the answer, but I believed that it was going to be 30 hours based on the SBA's interpretation of the ACA. But they have now explicitly come out and told us it's 40 hours. So I was wrong.
Again. Yeah, but I wouldn't say you're wrong, Ben. I would say you did a great job providing an opinion when there was no information. Fortunately, now we can explicitly clarify that it's 40 hours. And the calculation methodology we've gone over already, but it's explicitly included in the forgiveness application. Next question. We pay out unused prior year vacation every May, and we did this year as well. Since those were accrued 2019 vacation hours, should we exclude them from the forgivable request?
There's no requirement to. It allows us to include all payroll items that are paid, and it includes vacation as one of those items.
Yeah.
So I think your timing happened to be fantastic for you. Congratulations. Remember, you're still capped at 15,385, but I think you win.
Yeah. Can we use varying alternative payroll covered period when different FTEs are paid at varying cycles?
Ooh, I hear what you're saying. So you got some people that are weekly and some people that are biweekly or bi-monthly.
Mhm.
That's a great question, and there's no guidance on that. Uh, the fact that the application says that you must use the alternate payroll cycle if you make that election would imply to me that um, I think you would probably need to define what your payroll cycle is and use it across the company for everyone. I don't think you can. I don't think you can have multiple alternate payroll cycles. That would be my guess.
Yeah, based on the way the application is structured, you need to choose one, but that is an interesting question for how you would document that if your documentation has different cycles. Next question, what do business utilities include? Do they include disposal, cell phones, internet, IT bills? This one is very clear, and it's included in the presentation we did today. Of these, disposal is not included. Telephone is included, so I would assume that it has cell phones. IT is not included, but that's something that you can go back and reference our presentation on. Next question, do we include bonuses and commissions paid to furloughed employees in the cash compensation during the covered period, even if they will count as a 0 FTE?
Yeah. So I assume we're talking about, somebody who's now furloughed, but they've earned commissions based on prior sales or something, and we're paying those wages. Yeah, it's still paid during the period. It's still eligible. You're going to get dinged on the FTE ratio potentially, but you get it in the base calculation.
Yeah. We are considering special lump sum payments to some part-time employees we have been unable to pay before the 8 weeks runs out. Are there potential negative implications to doing this?
Not knowing the exact specifics, I mean, there's always the potential for negative impacts, right? But certainly, if your FTE ratio is 100%, yeah, you'll get 100% forgiveness on those bonus type payments that you make. But if you aren't at 100% on that FTE, some of that's not going to be forgiven. I guess that's your negative implication.
Yeah. Will severance pay be allowed to be covered?
It's included in the definition of payroll costs. So yes, as long as it's paid during the period.
Yeah. Here's one for me. Will River City Bank have specific schedules, worksheets, etc., that will need to be submitted along with the SBA loan forgiveness application? We've been having a lot of discussions about this. We're still finalizing what our final forgiveness application package or process will look like. We're attempting to streamline it to make it as easy as possible. There's a number of automated systems that we could theoretically access. So the bank hasn't really decided yet. I would expect you would need at least the application and at least the documentation listed in the application. Whether or not there's anything else we require would be clarified subsequently. But as soon as it's available, we will definitely communicate it with our customers. Next question, for health insurance costs, do we include the bill amount we pay our health insurance company, but subtract the amount taken from employees' paychecks as the employee portion?
Yeah, so the guidance on that is pretty clear. All of those costs exclude any pre-tax or after-tax contributions by employees. So whether that's medical, retirement contributions, et cetera, you don't get to count the portion that the employee counted. So yeah, the way I would envision that happening, as a business owner, I pay a $30,000 Kaiser bill. I withhold $5,000 from my employees' wages. I get credit for the net $25,000 that I effectively paid.
Yeah, and I think that's something for everyone to look at because that's going to be different business by business. So if you're just submitting, for example, invoices that you've paid to a health insurance company. Make sure that it is the employer cost that you're including on the application. Next question, and the wording of this is a little confusing, but it's essentially if an employee makes greater than 15,385, would we count 385 or 0 for forgiveness? And this is not a binary result for employees that make over $100,000. It's just capped at 15,385. Next question. If minority owner and W-2 employee of a sub S corp, are we table 1 or table 2?
Actually, you're table neither. You're actually line 9 of the application. So table 1 is for employees only. Table 2 is for essentially people that make over the limit or are outside the U.S. A self-employed owner employee. So you're a minority owner, but you are an employee and get a W-2 as well. Your compensation just shows up on line 9 of the calculation instead of line 1.
So Ben, right now it's 11:42. I want to be sensitive to your time. I know we both said we had to leave at 11:30. Do you want to try to keep going, or how are you on time?
I'm okay to spend a couple more minutes. Why don't we try to hit 1 or 2 more questions and then call it at 11:45?
Okay, that sounds good. Why don't we, since we have, it looks like 34 left, why don't we scroll through, and if you want to take any that you think look important, go ahead, and I'll look for a couple to highlight as well.
So I'll hit this one at the very top. Could you do a proration of an annual 401k profit sharing contribution? You know, that's interesting because there is the concept of paid or incurred. And in theory, if you do an annual match of that profit sharing, in theory, you would be eligible to accrue for 8 weeks worth of that. However, I think the problem you would face is as long as it's paid on the next annual cycle or on the next regular cycle, and I'm not sure exactly when that would need to happen. That's a really interesting question. I'll be honest, I might consider making a special contribution into my 401k for the 2020 plan year if I were trying to capture that, to make sure that I could include it. Because if it's paid, it's clearly included. I don't know how an accrual of 8 weeks worth of a 401k profit sharing contribution would go over if it's not paid shortly after the period ends. I don't think you'd have success claiming that.
Yeah, that's a good point. Here's another question from a restaurant owner. Are equipment, i.e. face shields, masks, special uniforms for dishwashers, etc., that are listed in the guidelines for restaurants to reopen included in forgivable PPP costs?
Unfortunately, no. It certainly would make sense, but again, within the payroll protection program context, it's not included.
Yeah, and that's a tough one for a lot of retail businesses. There's been some back and forth in Sacramento County lately with whether or not certain types of businesses are allowed to reopen. And I know it is a significant cost to get a lot of this equipment, but unfortunately, as the program stands now, it's not explicitly included.
So any other questions that really jump out to you, Riley?
There's a lot of specific questions, and I'd say because we're not going to be able to get to all of them, when you encounter, I think the best approach is to look specifically at the definitions included on the forgiveness application. Look at the instructions closely. There's a lot of good information in there. There's also a reference to and a link in the application to an interim final rule that lays out what explicitly counts as the covered payroll costs. And so we know there's a lot of questions that haven't been answered. We know there's a lot of things on the fringes that could go one way or another. It could have a material impact on how much you can get forgiveness for your business, but it might not be answered. And so when it comes down to those, it really is the responsibility at this point of the business owner to take a close look at the rules and try to comply with it as best you can in a reasonable way and in good faith, because you're putting your name on this application. So some of your advisors probably won't have all of the answers right now. And as a bank, our hands are tied a bit on what we can advise our customers on. And for a lot of these detailed questions, we don't have the answers either, because it's not explicit enough in the guidance. But again, I can't stress enough, there's a lot of good information in the updated application. If you haven't taken a look at it yet, I would recommend to read through, at least so you can understand what you'll be inputting and what type of instructions you'll have at the point when you go to complete it. Any other questions that jump out at you, Ben?
Nope. I just want to thank everybody for participating today. Looks like we had a great turnout. Hopefully this was useful and we answered your questions, and best of luck.
Yeah, likewise, I'd echo that. We really appreciate everyone participating today. I would like to thank Stella and the Capital Region Family Business Center for hosting this today. I think they've done a great job at providing useful information to local businesses throughout the course of this COVID-19 thing. I'd like to thank Ben for all of his time and insight today. Ben, you really are an outstanding resource for the local community on this, and I think this has been very valuable for everyone. So thanks, take care out there, and stay healthy.
Yeah, thank you, Ben. Thank you, Riley. I'll be sending out an email to everyone shortly. Take care.